All right, well, it's August, and here we are, halfway through 2026, and I'm sure you are dying to know what is going on in the real estate market. And I'm going to go through a lot of information with you today, and I hope you stay tuned and watch the whole video because I'm going to load you up with some really good data so that you can actually see what's going on and what is most likely to have happen. But before we get into the numbers and before I show you everything and pick it apart and explain it all, I'm going to give you a little bird's eye view of what's happening overall in our market. Because I've noticed every time I look at the Globe and Mail and I look at posts on Facebook and Instagram and all kinds of stuff, everyone's got an opinion and there's all kinds of interesting data and a lot of stuff comes out of Ontario and they speak for the entire country. And you have to remember always, please remember, real estate is very local. It's very local based on the city. It's very local based on the community. It's very local based on the type of real estate that it is. So for around Calgary right now, we are seeing price softening in condos and townhouses especially. And that's no surprise. You probably already knew that. It's continuing. But we're seeing a little bit of softening on detached, just mainly in suburbia. Areas far to the north, Livingston, Carrington, Airdrie, down in the south, Belmont, Ranchero, those type of communities, but you're competing against the builders. And what has been happening, and this is probably frustrating for anybody who bought their house in 2022, is the builder is probably selling the same house that you bought for less than you paid. And that can be very frustrating if you bought it in 2022 and you're trying to sell it today. But that's just the reality of the situation. So the builders, these builders are volume builders, so they want to keep product moving and they will find ways to save costs. They go to tradespeople. And I also think that there was some pretty good markup in 2022. So they're absorbing some of that. Maybe they were making higher amount of profits on those houses then, and they're having lower amount of profits now. But, you know, builders are pretty good at sharpening their pencil and looking for ways of saving money to keep the product moving at a lower price. So that is what we're battling. But let's get into some of the numbers here. So you can see I've got Calgary divided up into 8 different sections. And I want you to see there's the north. We're down about 4.7% up in that area. In the northwest, we're down at 3.1. So these are benchmark prices, by the way. So that's 621. So that includes condominiums as well. So you know, this is a pretty broad numbers, but it does give you a sense of where the demand is in these areas. But I'm really surprised here that the Northeast, this was such a hot market in 2021. The Northeast was climbing rapidly. And now, right now, the Northeast is the one that's correcting the most overall. But I want to emphasize again, a lot of it is townhouses. Man, I'll tell you, I cannot believe how many townhouses builders built in the Northeast in the last few years. No surprise in the middle, you got only 0.7% in the city center area of the city. That area holds its value quite well, and so does the West over here, only down 0.9%. The South is also holding its value quite well, and the Southeast is down only about 3.3%, and then the East over here 4.4%. So let's move along here and show you a little more detailed as to what happened last month. So you will notice July 26, we did 1,900 transactions. That's down from July 2025, where we did 2,096. So, you know, that's a 9% drop in volume. And some of you might say, well, that's not good. Well, no, it's not great. It's not good to have volume drop at all. But if you look at the fact that a lot of those condos that were selling last year, it's slowed down. The demand for detached houses and semi-detached is still stayed relatively strong. That's the good news, and that's why you got to really understand the differences between the products. Total sales volume, that's down about 7.31%, as you can see here. New listings, though, in July we're down 15%. That's good. That's really good. So, I mean, if we're going to have new listings, inventory levels drop just a little bit, well, obviously that stabilizes prices. And I think that's what everybody is hoping for. Certainly everybody who owns a property. Maybe if you're a first-time buyer and you haven't bought one yet, you'd like to see prices continue to drop. That's good for you. But for anybody that owns a property, they want to see prices stabilize. Corrections are good, but they're good to a point. So the inventory right now is sitting at 6,626. So overall, we're down about 4%, from July last year. And if we look at the sales to new listings at 57%, so that means if you went on the market in July, you had about a 57% chance of selling your property. And that's actually better than July of 2025 because we have less inventory. And sales to new list price, I get this question asked all the time. Say, Rob, if I put my property on the market, what kind of offers am I going to get? If I'm asking $700,000, am I going to get pretty close to $700,000? On average, it's showing you here that you're sitting at about 97.69%. But let me comment on that for just a second here, okay? Because when it comes to the sale price to list price, please don't forget this. A lot of that has to do with how good of a negotiator the agent that you picked to help you move forward with your transactions. Because when people make an offer, I can tell you there's a lot of psychology to this. So if you're asking $700,000 and they offer you $680,000, there really is no right or wrong to where you end up. Whether you sell it for $685,000, $690,000, $695,000, any one of those numbers can be considered fair market value. So the negotiations depend a lot on where you end up on that sale price to list price. It's just not a magical thing that happens. It comes down to how good a negotiator you actually are, or the agent you've picked is. Anyway, benchmark price right here, we're sitting at $569. So let's move down here for a little bit. And this chart is good. I like showing this one every single month because you can see in blue where the inventory is. And you notice right there, the inventory is sitting at levels that were going all the way back to prior to COVID. And so, if we could see those inventory levels start to drop off a little more, meaning that the inventory is starting to get absorbed, then we're going to start seeing a bottom on the prices. I've had people coming to me in the last 2 months convinced that prices are going to continue to fall. And I can tell you from experience, doing this a long time, most people who say that, it's just right off the cuff because nobody knows for certain what's going to happen. But if I was to make any bold predictions, and I just talked to the Globe and Mail actually about this the other day, that was actually in the paper, kind of exciting. I have a feeling that when this referendum is over, because I think there are some people sitting on the sidelines, I don't know how many people are, but my theory is there's some people sitting on the sidelines right now just feeling like, well, let's just wait for this to blow over and then we can move forward with our real estate plans. And that means that a lot of buyers might come into the market early next year. And you can see this inventory levels could change rapidly if just more buyers came on the market. We start absorbing that inventory and all of a sudden prices are stable. And who knows, they might even start going in the other direction. So we're going to do a little deeper dive here now on condos versus detached houses. So let's get into that part of it because this is important for you to see. Okay, let's look at this chart right here. I like to call this the smart money, looking at where the smart money is. And maybe that's just a lack of a better way of describing it, but look right here at properties over $1.5 million. You'll notice in red, this is 2026. So we've got more sales in 2026 than we did last year, over 1.5. We got more sales in rather than 2024, and more sales than we did in 2023, over $1.5 million. Now, I call this the smart money only because I refer to it that way, is that people who can afford to spend over $1.5 million obviously have done well for themselves. So they know how to manage money and they're pretty good at recognizing when there's opportunities. You know, I've learned a long time ago, if you follow the smart people, you'll usually make good decisions yourself. Because there's lots of people out there that are smarter than me when it comes to knowing where things are going. But that tells me something right there, that that price point is strong. Why are people over $1.5 million? Why are they investing in Alberta real estate if they think that the market is going to be dropping or we're in for some kind of a recession or there's doom and gloom looming? That to me is an indicator that they feel very, very comfortable with their decision to invest in real estate over 1.5 in and around the Calgary area. And even here, if you're looking at 1 million to 1.5, we are about, the last 3 years, that volume of sales is relatively the same. So that's all the smart money. Now, if you look at all the other price points, look at where the red is. From 800 to a million, it's down this year. 700 to 800, it's down this year. 800 to 900 is down this year. All of these other price points are lower except the luxury market. And my experience has been the average person, when they see markets look soft, they just get fearful and they wait. And they wait for when all of a sudden they feel more confident and comfortable that things are going to get better. Well, if you wait until things are all of a sudden getting better and a whole bunch of buyers come into the market, now you're competing. Didn't we see that play out with COVID? After COVID happened, like all these people waited during COVID thinking, oh man, this is not a good time to be buying real estate. Who knows what's going to happen? And then when COVID blew over, a whole bunch of people came into the market in 2021, and it was incredible. We had that mad rush for 2 years, and prices really climbed during that amount of time. So I'm not suggesting that we're going to see that kind of a mad rush that we had after COVID. I'm just suggesting that people that are doing quite well financially, they're confident investing in Alberta real estate, and I think you should be confident doing that too. This is a very, very good place to be investing in real estate, and I think you're going to find if you're looking at purchasing a property now, there's good choices. There's no real sense of urgency because the average property is staying on the market a little bit longer, so there's going to be opportunities. But I think if you're looking at 5 to 10 years of owning this property, now is a very, very good time to get into the market. All right, let's take a look at this chart. This is for people who are looking to buy property or sell property in and around Calgary. So I've got, all of the counties that are close by, and of course all of the towns in and around Calgary. You'll notice when you look at this pie chart right here, Airdrie had 6% of the market, so they do the most volume of all the smaller towns in the area, Calgary being 74% of the pie. So coming down here, I'm going to show you this chart. I think you're going to find this extremely interesting. So Airdrie is down in the last 12 months, 4.5% year over year, and they're sitting at a benchmark price of $603,100. And I can tell you, same thing as I mentioned earlier, the builders are the culprit when it comes to that. The demand has still been pretty good for Airdrie. Airdrie offers a lot in terms of location. There's so many amenities in Airdrie now, and it's been a pretty high demand area. But the builders have gotten pretty aggressive at lowering their prices. So that's just why we're seeing that number drop. But I really believe that you'll find Airdrie will probably bottom out sometime early next year. I think some of that inventory is going to start to get absorbed, as I mentioned, as this referendum comes to a close and whatnot, and some buyers get back into the market. Airdrie is definitely one of those areas that's on people's radar. Cochrane is down 3.9%, so close. And they're sitting at $659,400. So people are just willing to pay a little more to be in Cochrane, but there's beautiful mountain views. There's reasons for that. Chestermere, I never really understand how Chestermere got to 771,900, but wow, they're having some struggles there too, and it's the same story. Builders have got aggressive on the price, so people who bought a couple years ago on anything in Chestermere, you're not going to be worth what you paid, unfortunately, right now. That's going to take a little while for that to work back. But man, did people really step up to the plate in the last 10 years and spend money in Chestermere? And like I said, I just don't get why that hit that kind of a price point. But it just goes to show, at the end of the day, every property is worth what somebody will pay. So Chestermere is a good example of that. Strathmore, they're up 3.5%. What's going on there? 579. Why is the demand in Strathmore? Well, I can tell you what it is. It's the 579 because you can get affordable houses in Strathmore. And a lot of people now, and this is why I'm bringing this up, by the way, that's why I'm looking at the surrounding towns. Since COVID, there's still a lot of people that are doing a hybrid. There's a lot of people that only have to go into the office 3 days a week. So those people, some of those people are going out to Strathmore, going, you know what, I can do that. I can drive into Calgary 3 days a week, and if I can get more house for the money, why not? It's worth it. And that's why some of these rural areas are doing quite well. Canmore's, well, that's just at another level. I own a property in Canmore, and I never can understand how many people can walk into Canmore with $1.5 million and buy something that they're only going to use on the weekends, but that's Canmore. But even Canmore is actually softened a little bit by 2.4%, and we hadn't seen any softening there for a long time. Okotoks sitting at 695, they're only down 2.2%, and that's another town that people really like. Okotoks, quiet little sleepy community, safe community, and the demand has stayed pretty well, strong in Okotoks, and it's good to see. And High River, same thing, same as Strathmore, that you can get into a property pretty reasonably priced and make the commute, especially if your office is on the southern end of the city. And that trend is probably going to continue. And then the last is Calgary, sitting at 743,900. It's only down 1.9%. So the bucket has not fallen out of the bottom has not fallen out of the bucket when it comes to the Calgary prices. Some people have been telling me that, but that's just not the case, and the stats don't lie. Let's look at some of the other stats on rural communities. All right, let's take a look at some of these sales here in Airdrie. 946 year to date, by the way. That gives you a pretty good indication of why I like Airdrie. Chestermere, 333. Rocky View, 1,112. And that's what I'm finding very interesting. When I mentioned earlier about some of the smart money and the people that are willing to invest, the acreage market and the rural market has really stayed strong ever since COVID. We actually had a soft market before COVID. I was struggling to sell acreages from 2011 all the way up to 2019. After COVID came, that acreage market, the county of Rocky View, has definitely stayed strong. So those are some pretty good numbers. Foothills County is sitting at 799, and that's pretty strong too. Mountain View at 348. So what I'm saying in looking at these stats is if you are a buyer, or even if you're looking to just make a move from one property to another, if you take a look at where you want to be, the price range you want to be, there's really good opportunities to do it. Now, you might not get the price for your property that you're hoping for, but depending on what it is that you want to buy, there may be opportunities for that price to have come down a little bit depending on what it is. If you were selling in the city and moving to an acreage, you're probably going to have to step up to the plate and pay, a pretty decent price for that acreage property because it hasn't softened. It's like I said, if you were sitting in Airdrie, your property value might have went down $50,000, but the acreage you want to buy most likely hasn't. That's just the way it is because the demand is there. But that demand doesn't look like it's going to go anytime soon. So if you are moving into the rural communities, you You may have to step up to the plate on some of them to get what you want, but I think it's going to be worth it on some of these rural properties. But that being said, oftentimes the property you're selling might not get the number you want, but also the property that you're looking to buy might have also corrected a little bit as well. And it really does offset each other. In fact, in some cases, I've seen it where the property you're buying has maybe dropped $75,000 in value, and your property has only dropped $40,000 in value. So you're actually getting further ahead by making the move in a market like this. But I'm always amazed how many people are willing to, in a seller's market, they're willing to sell high and buy higher and totally comfortable with that. But the average person struggles with selling a little lower and buying a little lower, even though that makes more sense from an opportunity perspective. And let's not forget about interest rates. Bank of Canada kept them stable. They haven't moved. So I don't know what the 5-year fixed is right now for most lenders, but I think it's hovering around 4%. Obviously not as good as it was during COVID, but that's still a pretty darn good interest rate. And I am seeing that even if you want to take a variable rate, there's like 3.5, and I think some 3-year fixed rates are sitting at around 3.8, somewhere in there. So, I mean, these rates fluctuate every single day, so you can't like put your finger on it and say it's going to be the same one every time. But if you put all that together, there's definitely some opportunity right now to be buying and selling real estate. And I think if you're looking to invest in Calgary, this is the place to do it. We have the best city in Canada right now to invest in real estate. I might sound a little biased on that, but I'm also basing this on numbers. All right, hope this has been very helpful to you guys. And as always, reach out to me if you have any questions. You're curious to know the value of your house. I do it for free. If you want some, direction on timing, I'll give you some counsel on that. So I've done this for a long time, so I never really worry too much about people's timelines. So never hesitate to reach out, even if your timeline isn't until next year.